Welcome back to the Community Leader Podcast. I'm your host, Todd Welsh. This is episode 5, and we're going to talk to Tom Wilbur today, who we're going to talk a little bit about the Schilling Air Force Base, when it opened, when it closed, and the impact it had on the housing crisis in Salina in the 60s, 70s, and all the way up into the 80s. Talk a little bit about what it takes to open up a community bank and just his community service that the Wilbur family has done throughout the community of Salina, Kansas. Let's get right into the show, talking to Tom Wilbur. All right, we're here at Community Leaders Podcast, and we are with Tom Wilbur, who I'm so excited about having as a guest today. So welcome, Tom.
Thanks. I appreciate it. I'm looking forward to it.
Yeah, again, I shouldn't say this, that I say this about everybody, but when I was thinking of the show, a lot of thoughts went in my head. And again, a handful of people, and unfortunately, I'm going to get through the handful of people, and then I got to figure out who I want to do that. But again, I so appreciate you so much. I follow you on Facebook, the advice that you're giving for people, and I really am excited to have you on here today because of the vast knowledge you have about Salina and then what you've done for Salina. We're going to cover a couple of those things. And but first, before we do that, in 30 seconds, tell the listeners who you are and your family.
Well, I'm Tom Wilbur. I grew up in Salina. I was actually born on an Air Force base. My father was a pilot instructor in San Marcos, Texas, and my family has been here for generations. He moved back to bring us back to start his own construction company, and I was just a toddler at the time. So I was back in about 1960, so that's somewhat relevant to, I think, some of the things that we'll talk about. I'm married to my wife, Marlis. We were married at the University of Kansas. After my sophomore year, I have 2 grown kids, Brock and Brooke. Brock went to Northwestern, and Brooke went to good old K-State. I told them if they'd go to any place purple and white and Wildcats, I'd disown them, and they both went to schools that were purple and white. I grew up here, played on state basketball championship team, played at KU my freshman year, actually, and got my degree in business at the University of Kansas, and have had a great life. Most of my life I have been a Salinan, and I've grown up here. I have wonderful relationships here. My life really has been about Salina, and my brother went to Detroit to be a corporate car guy after getting his master's at KU, and he left as soon as that was done, and really has been a Detroit guy most of his life. My life's really been about Salina, and never really had any interest in going anywhere else. I never saw myself as being a big corporate guy. I wanted to be in a little smaller pond and swim around and be one of those kind of people that could influence and do positive things. And I've had great opportunities to do that. It's just been an incredible blessing.
Yeah.
I founded the Last National Band. We were together for 35 years. We're kind of gone with the wind these days. I led a Christian church, worship service for 10 years in Salina with my music. I was an avid golfer and a competitive golfer in junior high and high school, and I was offered scholarships for basketball and for golf in college. And so I love all kinds of sports.
Yeah. Now, you're pretty much known, though, for that. That's kind of the back history of where you're at. In Salina, I view you as known as a financial guy,
Right?
Okay, a true business guy, whether it's through real estate, banking, financial, and that's I think how most of the community knows you throughout your career.
And today I still meet with folks and mentor them. I'm not a financial planner and don't pretend to be, but a lot of people just have never really understood the basics of financial planning or management, and oftentimes they're a little too afraid to go talk to someone who's in the position of selling those things. So we talk about the very basics, and folks have come to me in the past with huge financial problems, and some folks come with just little financial problems, or they know they need to step up to another level in terms of understanding what saving and investment means in their lives. And so as a community bank president, as I have been most of my life, either in senior vice president or president of various institutions here, and founded my own bank in at Bank 6,
Right.
We get approached and stuff to help people. And at our bank, at Bank 6, our overall motto was, when someone comes through the door, just help them. We had no quotas in regards to what you were supposed to sell or how many products you were supposed to sell. Just make the decision that when someone comes in to help them. And you find that business is still pretty easy if you just follow one particular strategy, and that's just caring about people first, and the rest of the business will follow. And that's what I've always done.
Yeah. Let's start out with how I know you, how we met. Okay? So we were talking a little bit earlier, and so when I was 18, 19, I moved to town, and you knew me as, you just said it, your first what? Shredder.
Yeah, Todd was our shredder boy. Back in the day, we needed, in confidentiality, when you have all the papers that you had back in that time frame, it was much more of a paper dominant world.
Yeah. So this is we're talking about First National Bank on the corner of Santa Fe and Iron.
Yeah.
Right. That's what it was called then.
Yeah.
When I remember it. First National Bank. Okay. So go ahead.
And so, what year would that have been?
89.
89.
Yeah.
Okay. Yeah. And so we needed to dispose of paper in a reasonable way, and so the best way to do that, they didn't have the kind of shredding companies that come around and do that anymore. So
they didn't even have the little bitty mini ones. I mean, the one I worked on was, 30 foot long, and it was massive.
Huge.
But we were shredding. Remember the old document paper that would come off the printer like this? Yeah. That's what I would get, a bundle of stuff, and we would just shred it.
Yeah, so we needed that, and you stepped to the plate, and that was kind of our first time together. And your mom, of course, was in the financial services.
Yeah, so my mom worked at the bank, and she said, "Hey, they need a shredder boy," and I'm like, "I'm a shredder. I can push paper through the shredder. Like, that's me, That was one of the qualities I knew I had coming out of high school. Anyway, so that's where we first met. But then where we really met, so I kind of knew you, but I wasn't really allowed up on the the floor that you guys were at, of shredding stuff. And so
it's kind of dark and dank and stuff down
I was in the basement.
Shredder.
I was in the basement with a shredder. But where we really first met is, let's fast forward then to probably, so I was 18 then. I bought my first house when I was 21. And you were the instigator that did that. You were sitting at the Ohio branch then at First National. That was there. You were at that branch. Mm-hmm. And somehow we ran into each other, and you told me about the first time home buyer program that was put together by the state of Kansas.
Right.
So I wasn't even in real estate at that time. I can't even remember where I was working at that time. I think Anderson Leather is where I was working. I was making like $19,000 a year. I mean, I was loaded. Okay. And you said, "Hey, I think we can get you to qualify for the first-time homebuyer," where they gave us $15,000 as a grant.
Yeah, there were all kinds of different programs that were trying to be developed.
Yeah, and so you gave me my first home. You gave me my first loan. So I always go back and say, "Okay, you may be the first guy who said he may be credit worthy enough to pay back." And the loan was like $26,000. Okay, for my first house in Schilling Air Force Base. 1302 Midland, so I will always remember that address as my very first home. And we're going to talk a little bit later about your real estate career in Schilling and all that stuff. But anyway, that's how I always like to tell the guests who listen of what my relationship is and where it's grown to today. So you and I have known each other for quite a long time.
A long time. And it's been fun to see you progress through your career and be as successful as you have. I'm not blowing smoke here, but you've done really good things. And within our community, you look to people who establish leadership relationships either in whatever field that they do. And it's great to see people who you've known for a long time come through that, make decisions, good decisions on their life and the values that they hold important to them. And I think Salina has been a great center for raising people in an environment between the educational process, the real strong sense of family that we have in Salina, and generally just caring about other people. The volunteerism level in Salina is one of the highest that you'll find anywhere. People pitch in and they help other people regardless of what those things are. One of the things that I've been involved in numerous nonprofit boards, and one of them was I was asked to be on the Big Brothers Big Sisters board when it was in crisis. I literally went to my first meeting and we had one match in all of Salina. We
Wow.
had a big brother and a little brother and stuff, and that's all we had. And at the end of the meeting, they said, well, we have $1,000 worth of bills, so welcome to our group. Everybody, we have 10 of us, so everybody write a $100 check, and we'll see you next month. And so it wasn't long after that I became president, and we founded the whole bowling event. And then
Which just took place last Saturday.
Yeah.
Bowl for kids' sake.
Yeah.
It's huge.
Incredible. And
Raised over $100,000.
we our first year, I think we raised $5,600 on our very first event. And then we approached the United Way about being a part of the United Way during that time frame. We hired a gentleman named Dennis Feeney, who was a social worker type of person, had a background in that, and we asked him if he could work part-time because we couldn't pay him a full month's salary to do that. His commitment, along with the commitment that Karen Hale Young had, and prior to them Clancy King, who kept the program alive, was the reason that we have such a wonderful, vibrant program today. And the boards and the people that have committed to that since that time have just made it stronger and stronger. You think about the impact of just one person on one child in Salina, and then multiply that times hundreds and hundreds of kids who have benefited from that one thing. It was literally close to folding under our watch. But you have to make a decision when you're a nonprofit to say, is this organization running us, or are we going to run it? And so the first thing that you obviously have to do as a board is figure out where the revenue is going to come from to generate the work that moves on. You can't match up kids in an environment with someone who's going to be a big brother to them and then find out that person doesn't have the appropriate background for being around children. So everything that you do is important. And one match was way more important than, just putting people together for no reason. So.
Yeah.
But that was an interesting dynamic. And, of course, with all the nonprofits that I've worked with, those are the things that you try to bring to the table, is an understanding of what your role is and how you make them better.
Yeah. One thing I want to touch on with you.
Excuse me.
A lot of people don't know, which impresses me, that you started your own bank.
Yeah.
Okay. Now, I just say that in one little sentence. Now, it would blow people's mind listening to this, even mine, of going, okay, number one, how do you even start a bank? Like, I would think of the Rockefellers and all those people all had the money that they could just start their own bank. But in the year, so listen, we're talking about Bank 6, right? But again, it's hard for me to even know that I'm not even smart enough to ask the question of how would you start a bank. But when I did talk to you one time, the one thing I did learn was that you had to have a charter, or you had a charter, and you shared with me a story once that you actually, was it a small bank that you purchased that had a charter?
Yes, we
so
bought
tell
the
that
bank.
story.
Well, it's an interesting variable. The previous job, I was president of Security Savings Bank, and we had 10 branches statewide, had 300 employees under our watch, and I had identified that our ownership was violating banking laws, and that's a tough thing. I was being paid a lot of money, and so we had kind of a skirmish, and I went to the regulators and said, hey, there's some challenges here and we need to fix them. And through a series of events, we parted ways. They essentially got to the place where they had worked with the regulators enough, and they just said, we don't need you anymore because you're not on our team. And then a number of years later, Security Savings Bank failed. So starting a bank came from desperation.
Yeah.
I was working as president one day with 300 employees, and the next day I was out putting up Christmas lights at my house. So starting a bank is an interesting dynamic. It's you need a lot of people that trust you because you have to raise capital. In banking, you have to have $1 for every $10 in assets that you have in capital. So essentially 10% of the funds that you have to have approximately have to come from either you or the people that you've raised capital with. And with my partner, we went out in 30 days and we raised $11.5 million over a 30-day period. We met with 106 individuals, and we raised right at 11. I think it was 11.5 originally. We pared that back some.
And what year was that?
It was 2005, 2006.
Okay. And the only reason I say that is I want to say thank you, because I was one of those 100 people that you called to invest in your bank.
Uh-huh.
And I couldn't remember what year that was, but I think the minimum you were asking for was $250,000.
200. We wanted to have at least 5. We wanted to have at least 50 to 55 people that each were putting in 200,000. And the reason for that was a disintermediation, a feeling of community, of folks within the community that would all be part owners, as opposed to just having one person who had $10 million that started the bank.
Yeah.
So it gives you this wonderful sense of community, but also each one of those people has bank accounts. They're business leaders. They have a sphere of influence, and we grew the bank from nothing to a significant amount of assets fairly quickly.
Yeah.
So the way we did start that was, you can start a bank from scratch. You can just fill out all the forms and do all that, and they consider you to be a de novo bank. And there's all kinds of rules and regulations when you're a de novo bank. Or you can go find another bank and buy that bank and then branch it in. And so we found a little bank. A guy named Steve Prickett had his own little bank over in Geneseo, Kansas. They have a couple hundred people over in Geneseo. They have a convenience.
The whole town?
Yeah, they have a convenience store, and they have a bar and a little manufacturing company there. And so we traveled the state of Kansas visiting with people about, who might be interested in selling their bank. And frankly, the smallest bank that you can find is the one that you will pay any multiple on when you're purchasing the bank. So the smaller it is, the less kind of blue sky and stuff that you're dealing with. So we purchased that bank. We branched it back into Salina, and I think it had $465,000 worth of loans after being in business for like 100 years. And I think our first month we went from $465,000 in loans to like $18 million.
Yeah, and the bank's doing incredible. And where I was headed with that story was, in 2005, you asked me for $200,000, and I didn't have it.
Right.
You know what I mean? Like, you might as well have been asking for $40 million. Right. You know what I mean? At that age, I was like, but the opportunity, and for the listeners, that's why I want to create a little bit of community leaders, but also when somebody gets done with this, is they take the wisdom of what you've learned through your career as a businessman, what I learned in our town, and say, okay, these were the opportunities. This is where I failed. This is what can we learn from that? And I don't know what the learning lesson of that is, other than I would just say thank you for thinking of me then. And I can remember sitting down with you and you saying, hey, we're opening this bank and I need a couple $100,000. And I just wasn't in the financial state where I could do that. But I look back now and go, if I knew what I knew now, I would have figured out a way. I mean, what's the opportunity? What's the opportunity in a guy's life that he gets called to invest in a bank? And it's not very much. Like, I haven't received a call since.
Well, certainly from a scratch. I'm not aware. There may be one or two in the last 8 years or so that have started a de novo bank, because it just hasn't been part of the platform. And there were actually a lot of de novo banks starting during that time period, because a lot of people were being displaced from larger banks, and they said, hey, I know the customer, so I'm going to start my own. There were 27 banks that started in that year in the state of Georgia, and within 3 years, 25 of them failed. So it's not an automatic guarantee that you're going to survive. And certainly within the framework of as we've seen recently with Silicon Valley Bank, there are lots of risks within the business. The margins on banking are very small. And so you have a lot of assets and stuff, but the spread between what you loan money out to for a customer and the deposits that you take in are often fairly narrow, and narrow very quick when the Fed does what it did recently by raising interest rates. And Silicon Valley Bank, for example, had listened to Jerome Powell and Janet Yellen that inflation was going to be transitory. And so they continued to put money into long-term yielding assets, treasuries and mortgage-backed securities, while the Fed was continuing to raise interest rates. If you think about just a few years ago, what were the interest rates on a home loan? They were below 3%. So by the time you get a mortgage back and you bundle it $1 million at a time and you put it into a security, you might get 2.5%, 2.25% yield on that to put on your books. Well, when the Fed raises interest rates, 8 or 9 times over the course of a year, what else happens to a mortgage loan when you've made someone a 2.75% 30-year home loan? The duration extends forever, because no one's going to sell their house and give up their 2.75% rate.
Yeah, which is what we're finding right now in Salina. People say, "Why is there no inventory?" There's no inventory because if you're, sitting on a 3% mortgage now, and your next move is, say, I want to move from a 160 to a 250, so I can get that third-car garage, or I can get that extra bathroom or a finished basement. Most people were thinking they want to move up maybe $400, given what they're willing to bear in a payment. Well, you move from a 160 to a 250, and you move from a 3 to a 7% interest rate. The payment now is $1,100 more or $800 more, and it's just a little bit more than they want to go through.
Yeah, that mortgage interest rate is such a key component to keeping people in a home. When in general, most mortgages last around 6 to 7 years, and the financing is based upon treasuries and stuff in the open market. That would be between 7 and 10 years. That's where you find pricing that's made. Well, when those yields go up dramatically, and you have, as Silicon Valley Bank did, they had trusted that those inflation rates were going to come down and that interest rates would stay very stable. They had over 50% of their earning assets in long-term or reasonably long-term treasuries, 5 to 10 years in length, and in mortgage-backed securities, which we know are often 20 to 30 years in length, but have a normal payoff of around 7 years. But if you've made all your customers, if you've bought the mortgage-backed securities that are backed at 2 3/4, the duration goes from 7 to 10 to 15 years, and you're living with an interest rate that you're yielding that's well below what you're having to pay for deposits.
Yeah.
And you don't make that up in volume.
Yeah.
You're caught in a trap.
And it goes down quickly.
And they frankly had done some risk planning for the mortgage backs and for the longer term treasuries that they had. They had purchased some monetary hedges, and we won't get complicated with it, but they had billions of dollars of monetary hedges that would have offset any of those changes in interest. And because they had a risk management officer that had left them in April of 2022.
I had heard that. They didn't have one for like 7 months.
They had a committee. I think it was with some board members,
yeah.
And so that might not get the attention it needs. But at the end of the year, they had a bunch of hedges that would have hedged them against those changes in rates, and they let them go. They expired, and they didn't replace them and stuff. And so at the end of the day, they were sitting there with half of their yielding assets in very low interest rates yielding to the bank, and then they were having to pay much more for deposits. Then you get a little concern in the marketplace, and today with electronic banking, you can move your money out in like 8 milliseconds.
Right.
And it's kind of now it's a run on the bank, and if you don't have deposits, you're dead in the water. So
let's think locally.
We trust that relationship between our depositors. That's if you're, as a community bank, we trust that the deposits are going to stay relatively steady and stuff, so that we can make loans in Salina to consumers and to homeowners and to businesses. If those deposits whisk away because of some condition, our ability to replace those deposits can be hampered dramatically in a smaller bank.
Yeah. So I think the viewers and listeners, by your last 5 minutes of talking, understand that you know what you're talking about from the lending side to what's going on in the economy. My question for you, though, is you don't have a crystal ball, but where do you think the interest rates are going to go in the next, by the end of, in 2023, for where are we going to be at with interest rates, in your opinion?
I think interest rates will be stable. We are seeing indications that because the economy is facing so much headwinds that we've seen Treasury rates fall recently. They were up as high as they were all kind of into the 4% range, and as we sit here today, they're all in the mid threes, and so there should be a softening of longer term fixed rate loans that are made in the marketplace, and so they're better than they were last year already. And as how that translates into the willingness of investors to buy those loans at those interest rates and stuff within the market, it'll be interesting to see what that dynamic is. I would be silly to try to predict what interest rates will do.
Yeah. Do you think we'll ever see 3.5 again?
That's an interesting question. I begged everybody online. I mean, if you're a Facebook friend of mine, I've been begging you for the last 3 years to restructure your home loan and take advantage of what I saw was the lowest interest rates in my lifetime.
Yeah, speaking of that, I'm following you on there. What I love best about following you on Facebook is you're not selling anything.
No.
You're just like, hey, here's the wisdom that I have from my financial background, business, and all the people I've seen who are successful and the people I've seen fail. And the opportunities you've seen and the rise and the low, it's like you have this sense inside you that says, hey, I think this is a time that I'm not telling you to do it. I'm just saying you may want to look at it to restructure this or to do whatever. So I love that. And then I know that you purge your account every now and then.
I do.
Yeah. And you only keep people on there who you see a value, who recognize what's going on and what's there. And so
the reason I keep them is if they're actively engaged. If I have people that are not actively engaged with me, because when I'm sharing information about banking, I don't know a dang thing about fixing a car. I don't know anything about landscaping. I don't know anything about sewing. It doesn't matter what it is. We each have something to contribute from our lives to help each other.
Yeah.
My area of expertise happens to be in areas of, it ranges pretty dramatically because I have a lot of interest, but between art and music and composition and recording and financial matters and investments and helping someone get their feet under them when they've had trouble. In banking, you have a lot of experiences with people. I had a lady walk into the bank once and she said, I need $35. I go, why do you need $35? I need $35 to buy a bus ticket because I'm going to the mental institution in Topeka, and that's where I'm going to stay. So we just gave her $35. But past that, I had a couple walk in once, and they plopped down like 10 credit card bills on my desk, and they totaled $180,000. And I asked, please tell me that you purchased something on these credit cards that's an asset. And we consider an asset to be something that you buy that has the potential to go up in value. And they had bought big screen TVs and clothes and entertainment pits for their house and couches and, anything and everything that you could think of. There wasn't one thing of the $180,000 that they had in debt that you could consider to be an asset. They were all just things that would continue to go down in value. You'd take your clothes to give away, and all those kind of things. So at the end of the day, turning your life around to make decisions that one of the things I tell people when I'm working with, you don't need Oreos to live. And so the choices that you make, I love Oreos, but the choices that you make related to what you do with your life, the decision between what you really need and what you want are the most critical. And what's interesting, a lot of people that I meet in a couple relationship, one person's a saver and one person's a spender.
Yeah.
It can be the wife, and she says, I know I'm supposed to save, but I have to buy a new pair of shoes every week. And I say, no, you don't. Or the guy says, well, I'm kind of into electronics, so I have to have the latest Apple Watch and all those kind of things. So they spend their money on things that are going to go down in value and fail to pay themselves first. And one of the things we do in financial planning is to try to take a little bit of their income on every paycheck and set it aside in something that will grow for them over time, and to get them into fractional type of shares on ownership of stock, where they pick out their best 10 stocks and they just put in $25, $50, $100 each month and stuff, and start to build a nest egg so that they have something to fall back on, because it's expensive out there. Put my mom in the nursing home, and it's $10,000 a month.
Yep.
$10,000 a month, and you have to demonstrate that you have enough money to be able to pay them 3 or 4 years before they even accept you. So that's $360,000 to $480,000 to be admitted to a place where someone would care for you.
Yeah,
and that's quite a bit of money.
Yeah,
and so we, in planning and stuff, we're just looking to try to help people get a start on understanding the power of compounding, and taking away from me as a banker. When I loan you money, I'm living off the compounding on you.
Yeah.
We want you to be in position to live off the compounding that you put into your own account and prosper yourself.
Okay, so I'm going to go back to the original question.
Okay.
What's the interest rate going to be in 2024?
Well, again, I don't.
We're going to watch this back, though. I just want you to see a guess. Like, I'm going to say, so it has nothing on there. I'm going to say 6%. In 2024, I still think we're going to be around 6%. I think they're going to figure that out. I'm just looking for a prediction from you.
I can tell you this. The Fed is in a really tough spot as of today, and that is they have to get inflation stopped. Well, how do they get inflation stopped? They have to raise rates. There's no other way around it. Unless some catastrophes begin to take place and the market changes. So they have to continue to set out to do what they've done. It's really their only job is to keep inflation out of our lives. Inflation is the worst possible tax you can inflict on low and moderate income people, because everything that they buy is much more expensive and they can least afford it. So they have to continue to strongly consider staying on the path that they are, and interest rate rises.
And the number is? I'm putting you on the spot.
Well,
I got to have a number.
I got to finish this thought.
Okay.
Because interest rates rose, what happened to the SVB, Silicon Valley Bank? If they continue to raise interest rates, there will be more pressure on banks, particularly in the regional and national arenas that have put their money into what they thought were safe investments, and that's securities and mortgages and stuff. And the duration will lengthen on those, and they'll still be underwater further with higher interest rates. So the potential for other types of banks similar to what SVB went through are there if we have to continue to raise interest rates. If they don't raise interest rates and try to look at the higher good and say we can't have banks failing in order to survive, and they stop the interest rate increases, then inflation is still a monster that's going up. And if they do that, I believe if they stop raising interest rates to try to get inflation under control, that inflation will continue to pummel us, and I think interest rates will be higher.
Really?
Yeah. But if we can get a handle on a balance between employment and our GDP and all the variables and stuff that go into a healthy economy, I think we can come back very quickly. But it's going to have to come with discipline, and that discipline has to take place by them doing their jobs. They didn't do their jobs originally. Inflation started out very quickly, and they got behind the curve. And when you're behind the curve, it's almost impossible to reel in. Yep. So we've seen that reflected. And just as you said, the higher interest rates impact our economy in a dramatic way, particularly in housing. Although when I first started in banking, interest rates went to 15% on fixed rate loans, and that really.
The loan you gave me was 13.
Yeah,
like I remember going back and looking at that.
And that was a good rate.
Yeah,
that was a good rate.
That was a special rate.
That was a special rate.
That was like a special rate for the program I was doing, was 13%.
Yeah, I think it had 1/4% or 0.5% mortgage insurance on top of that, so it was effectively like 13.5.
Yeah. Well, let's segue out of financials.
Okay.
I want to do something a little bit more local, and you and I are going to be able to talk pretty good about this because I'm a real estate agent, real estate broker. You were a real estate agent in Salina. Mm-hmm. So let's go all the way back there, and then let's talk about You as a real estate agent, the community, and then more so mostly about what you and I were talking about on the phone when we talked about coming on here, that a lot of people don't know in our community about the Schilling Air Force Base when that closed.
Yeah.
But so let's go back to, when did you get your license?
So it would have been in the late 70s. I graduated from KU in 76. And so I had mentioned to you, I was a restaurant manager at KU. My wife and I were married, and we needed extra money. So I worked pretty much full-time in a pizza restaurant coming in college. And when I graduated, I was making about 2 to 3 times more than the average graduate was making in business school with Fortune 500 companies. And they immediately transferred me to Iowa City, Iowa. And our store there would have thousands and thousands of people and thousands of pizzas every week. We had a staff of almost 200 people, which would be an insane number of people for a little pizza place.
Right.
But it was a big pizza place. And so I did that for a couple of years, and it's a lot of fun, and it's a lot of hard work. But I loved working when I was young, and I really always have. Really miss Salina. Had both of our sets of parents here. And just, I miss the wheat, man. It was interesting, but they have a bunch of corn up there.
Yeah.
And just being around the environment that I'd been raised in. And so Marlis and I decided to move back to Salina, and I got involved in real estate fairly quickly after I came back, because it's something I always wanted to do. And for several years, I sold real estate and loved every second of it.
Who did you work for?
Well, I started with Alice Denning.
Yeah.
And she was a lovely person and helped me a lot. And then I migrated to Realty Associates, because in those days with Ellie Ritter. And one of the factors that was involved in that has nothing to do with personality. It has to do with the monetary compensation. When you have so many listings, then the listings and the sale would mean a higher return on commission. And so it was just a business decision. But Alice was delightful, and the Dennings have been good friends for my whole life. Gary Denning's a classmate and great friend of mine. So I did that for a number of years, and I was in a bank one day and stuff, and just said, "Hey, you guys are just slow as you can be, and you can't get anything done for me." And they go, "Hey, do you want a job?" And I said, "I don't want to work for a bank.
Yeah.
There's no innovation of thought. You guys have committee meetings, and then somebody decides to go get water out of the water fountain, and then you guys go play golf at 1:30. It was literally a world of not. It was deeply regulated and not much structure. But I got opportunity to work with some people that were really looking for innovation. And when I'd been at Security Savings for a while, I got in my car one day and just went to First National, said, "I think I can transform this place." They would take people who were interested in a home loan and just send them to savings and loans.
Yeah.
Because they didn't want to hassle with it. And
what was the average home back then, price-wise, when you were selling?
I'd probably say 55 or 60, something like that.
Okay.
An executive home was anything pretty much over 100. Everything west of Broadway and stuff on all the properties that had been associated with the air base, almost you couldn't really sell anything for over 29.5. If you went to 30, man, you were stretching. And now I see the values of homes there right now, and it's just almost incomprehensible to me. And I'm still in ownership. I'm a part of a group. We own 30 rentals in Salina, so I'm pretty attuned with all the various values and what's going on. And this market is unbelievable. But one of the reasons and stuff, as you and I have discussed, and you know full well, is that in the early 60s, when I was a young lad, about the same time the Beatles came on the scene, which was a key turning point in my life as well. Robert McNamara was the head of the Defense Department, and it was around the time that John F. Kennedy had been assassinated, and we were Salina was decommissioned as a strategic air command base. We'd have those B-48s and B-52s flying all over Salina all the time, and we had thousands of people working here at the base as part of our defense of America. Salina has missile silos all around it. We had strategic air command. We had pilots and all the associated mechanics and everything associated with that.
Yeah, I'm trying to think back of what Salina would feel like, knowing that you had, what were there, like 5,000?
No,
Air
we
Force?
lost 9,000 people in a year.
Yeah.
And there might have been 1,000 that remained out of the whole base for a little while, and some of those were the wives of men who were serving in Vietnam for the most part, and they still resided here with their families because they really didn't have any place to go when their husbands were deployed, or they would either move back with family or go back to someplace more familiar when they left.
So I was thinking that they said the base started in 48, 46 or 48. And then they shut it down in like 49 and then reopened it up again in 1951, 52.
Sounds about right,
okay?
yeah.
And I didn't know this, that the name Schilling Air Force Base, you know where that came from?
I don't.
I did a little study. It's really interesting.
Okay.
The guy who shot down so many aircraft in a particular war, I didn't read enough on there, his last name was Schilling.
I'll be darned.
And so they named the road. So that's where the name Schilling comes from the road that we have today out by Lowe's and going out to the airport.
Yeah.
But I don't remember his first name. But Schilling was his last name, so they named the Air Force Base when they opened it back up again and brought in whatever aircraft that he particularly flew, or when they opened it back up for the Air Force in there, they named it Schilling Air Force Base.
I don't, my recollection, of course, I was a child, but I recall all the bombers. Yeah. I don't recall.
So would they be flying over Salina all the time? Just those huge bombers.
Oh, yeah.
Wow.
It was a lot like Wichita, around McConnell. There's always traffic.
I get excited when I see like 3 helicopters flying in from Junction City, to the bombing range. I can't imagine having those massive planes flying over Salina.
One of the
time.
downsides of buying Geneseo Bank when I went over there was you travel by the bombing site, and one afternoon when I was headed over there to meet with Steve, there were 3 stealth bombers zeroing in on the road as I traveled between Lindsborg and Geneseo, and I thought the possibility of me looking like a target on some kind of radar screen, I could get annihilated. And I tried to get out as fast as I can, but man, those things just look so unbelievable as they descend on you.
And so they shut the base down in
63.
Okay, in 63 they started shutting it down. It looked like it maybe was fully down by 65, I think.
Yeah.
And then the city, you may know the story. I this is what's been told to me. Somehow they worked it out with the government that they were to transition what we know as the Airport Authority.
Yeah, Salina Airport Authority.
Salina Airport Authority. And so
we had some very prominent Salinans.
Yeah, like I think back of who those guys, like I want to figure out who was on the city commission or what that board is. I'd love to interview those people to say, okay, what did you guys actually do when you were handed all of this? It was 2,600 acres is what was owned by the Air Force Base. Now, I don't know how much we actually then took over. And I know the bombing range still has some acreage out there, but in the study I was doing, the Air Force Base originally had 2,600 acres. So I'm sure that goes clear out to the landfill if you think of how far that would go around. And how they got rid of all of that stuff, I'm not really sure. I do remember, and that's why I'd love to interview Margaret Robertson. Does that name ring a bell with you, with Margaret? Somehow she took over all of the Air Force Base housing and was able to sell it. I don't remember if a group bought it all or how that worked out.
There were all kinds of gyrations that went on there. There was a lot of essentially right at that time, as you're indicating, we had housing for 9,000 people that was essentially vacant. We had 9,000 soldiers and families who would go to nightclubs. Around Salina, there was a pretty good nightclub life because that's what soldiers do.
Right.
The Cozy Inn always had a line of soldiers because that's what soldiers eat. They eat sacks of cozies for, $6 for $1 or whatever they were back then. They were ridiculously cheap.
Yeah. So the economy really kind of tanked.
Economy was in serious trouble because where does that come from? And the retail strategies and stuff that people had put in place were essentially, hey, we've lost a fourth. We we were about 42 or 43 and dropped to about 35,000 within about a year and a half. And so as a child, I can remember the folks that you would hear about and stuff worrying about what's going to happen in Salina in the future. And so the Salina Airport Authority was formed as a public-private group to figure out what are you going to do with all this housing, what are you going to do with all these military facilities and assets, what are you going to do with one of the longest municipal runways in the world and stuff, and how will that translate into something that is meaningful and that you can create economic value from and that you can recover from, essentially, and have a plan. And a lot of the business leaders at that time that were real community leaders and stuff, not only in their own respective businesses, were on that board. So you had a lot of really smart people, and they got involved and were in the early board things. And it's, there's always been a good group of people on the Salina Airport Authority who.
Yeah, I need to get Tim Rogers on here. I bet Tim would be phenomenal.
Tim and I played basketball against each other. He was from Hutch and in high school, and I've known him most of my life. He's such a quality person. But I think his leadership has been a real key component to the development and growth out there, and I give him a lot of credit for that. He's really good at what he does. But yeah, that in terms of the development, how much land they had and all that. Of course, we also got left an environmental issue out there and stuff. They would just dump all the solvents and the fuels and things into the ground, and who knows whenever that will ever really be taken care of.
I know they're working on it.
Yeah, it's been negotiated back and forth for years. And
I was doing some study before this just because I knew I wanted to talk about the Schilling Air Force Base and the housing and how that all took place. And I was reading a little bit on the cleanup, and they said the most part of the cleanup was these fuel tanks. Think of the fuel tank. These were 50,000-gallon fuel tanks. And they knew that they were leaking, but they would just keep putting it back in there because they didn't want to replace the fuel tanks. And back then, nobody really knew about the I don't know if the EPA was around then or I don't know when they were there, but nobody seemed to care. It's like, well, they're just leaking, keep filling them. I bet we can fill them faster than, they can leak. And they just leaked for a considerably amount of time. And so that cleanup, hundreds of millions of dollars. I think they offered us like $20 million to fix it once, and then they came back the next time it was like $80 million. Yeah.
I don't think any of those numbers are capable of overcoming the variables associated with all that cleanup. It's got to be massively expensive. Yeah. So anyway, during that time period, you had 9,000 people move out. You had all the government housing, and most of those were the 840 square foot 3-bedroom homes that sat on the
which is one I owned.
Yeah,
that's what I bought.
Yeah.
So when you gave me the loan, 1302 Midland is a half a duplex sitting out there in a 3-bedroom.
It's funny being in real estate and financing as long as I have. Sometimes I can even tell you what color the house was because I've seen so many houses in Salina. And of course all the duplexes from Hollybrook and Fox Run and then you had the other general VA housing that would show up behind Brown Shoe Fit and just a lot of different areas. A lot of things west of all the Indian Village stuff.
Do you remember at all the longer I live in Salina, the more I want to learn the history of it.
Yeah.
And especially with our downtown, and we could talk forever about that. And because Monty Shadwick's going to come on here, and he's collects all the postcards of downtown. And then I want to get Chuck Carroll on here.
Oh yeah.
Talk about downtown. But do you remember at all? They said, and I think I've even seen photos of it, that the military gates to get on the base would have been where Schilling and 9th Street stop. So obviously it would have looked a little different, but they say that the gates to get in there. Do you remember that at all? Then in the 60s?
I don't remember them being at 9th and Schilling. seems to me that they were further back than that, but they very well could have been.
Yeah.
You
So
know,
9th and Chili Bit right
a-
now where Walmart is, somewhere between 9th and obviously to that bridge where Casey's is, they'd have to be the gates.
Yeah, it seemed to me that it was in there, but I was just a child. And so when that happened and stuff, you get the impact of hearing all those things. And of course, the families, and it was an interesting time. You had the kids that lived out there in the base and their assimilation with high school kids of the townies.
Yeah.
And you had all those dynamics. And of course, we just had one high school. We had Salina High School until I was a sophomore, and when we broke up schools. And but yeah, it's so. Anyways, in my dealings with real estate, what I've found and what I learned over time was that, you know, this when you displace that many people and make available that many homes in a community of our size, the ability to bring that back in and the dynamics it has on the rest of real estate lasts a long time. And I don't think a lot of people realize how long that really was. But you can pretty much wipe out the 60s and a good part of the 70s as it became an alternative form of housing. If you needed a house, there was a house for you, as you bought one.
Mm-hmm.
and
you
so,
got to think that was in the 90s. And honestly, the person I bought it from had bought it from somebody who had bought it from the city or the base or whoever
Right.
had bought a bunch of them.
Right.
The story I heard was they were going in and selling. You could buy like 30 houses at one time.
Mm-hmm.
And so there were investment groups who would buy 30 at a time.
Mm-hmm.
And
there were a number of dominant groups. It was still a risk. I mean, all those things. You're eventually going to turn them over, but just like when you turn over a piece of raw dirt in Salina, you don't know how quickly you're going to be able to sell all the lots and have a completed project. So there's always risk, and you don't know what the interest rates will be if you have borrowed money. So all those things are components. So anyway, during that time period, you look at the 60s and 70s and say, man, we just had housing everywhere. And so during that time frame, and then when I was involved in real estate, clearly there weren't tons and tons of houses being built because they weren't required. Now, if you think about it, an executive home at $100,000, you could buy a lovely home for $100,000. And there's always a point in real estate in any area, and Salina is the same, where there's a marketplace for homes up to a certain level. And then once you get to a certain price point, oftentimes the buyers will choose to build what they want,
right,
versus just accepting something in the marketplace. And you, as a person who's developed, you understand that quite well. I don't exactly know where that point is in Salina today. It might be at 400 or 450 or 500.
I think you're right.
I think it's in that range.
Yeah, 450, 500, I'm guessing right now.
So it would have been 100 back then. And when you were 100, you were making some choices. Do I really want to build, or do I want to buy something existing, the handful of homes that hadn't been built? So we saw development in like East Minneapolis, East Ellsworth, on the east side of Ohio Street. And we saw 3-bedroom rancher type homes, because Salina is clearly a ranch style,
right,
ranch home environment. And people often ask me, why are properties more expensive here? Well, a ranch style home per square foot is more expensive than multi-levels. They go, well, things are cheaper in Kansas City. Well, they built you a house on a 65-foot lot with multi-levels and stuff, and you use the basement, the next level, and the next level to gain your square footage. And so the home appears to be less expensive, but they're building a less expensive type of dwelling. And Salina loves the rancher. There were lots of times where homes that aren't a ranch-style home don't sell because they just aren't a ranch-style home. People prefer it. They want to have that. A lot of times they want to have the basement. You have to trade that out sometimes for the expense. You need to, in order to conserve, you have to put something, some homes on slab, because that's just part of the component of helping people get into affordable housing.
Yeah, it's funny because they go to Kansas City and they see this massive, a 2-story home looks way bigger.
Sure.
And they're like, you mean I can buy that for
Right.
$260, but
Right.
you want $300 for this ranch?
Right.
Well, you're exactly right. If you took the components and broke it down on how to build a ranch versus that one,
Yep.
it looks much bigger.
Yep.
But it costs way more money to build a ranch, and that's typically what
per square foot. There's
And there's no doubt, and people watching. I live in a 2-story home. I think yours is yours.
We're a story and a half.
Story and a half. It's a good sized home, but from the back it looks like a 2-story. But from the front it's a story and a half. But I'm thinking I live in a 2-story, so there's no shot on 2 stories. But ranches will outsell 2 stories.
They do
in Salina, Kansas.
And I've owned a 2-story before, and it was more difficult to sell.
And a tri-level will outsell a bi-level, and and so it's interesting. But we're a true ranch.
You look at the number of percentage of homes in Salina that are a ranch style home. But you get into the 80s now, and that's when I transitioned from real estate into banking. Well, the banking industry was deregulated in the early 80s, and they said, hey, we've had all these constraints where a bank can pay 5.25% for a CD, and they'll loan you money for 8.5% on a home loan, and then you go play golf. But the world was changing in dramatic ways, and the monetary processes around the world were becoming there was so much disintermediation, so many changes that you couldn't continue to have a regulated banking system that would pay X amount and that you'd receive X amount and be competitive in a world environment. And so in a short period of time, you think about all the savings and loans that were out there. They had 8.5% loans on their books. They were actually getting they were having to pay 5.5%. It was 0.25% higher if you were a savings loan for some reason. But they were really building in loans. And so you had portfolios, not unlike what I just talked about Silicon Valley, in terms of there was a set amount that you get each month on the mortgages. When they deregulated interest rates, deposit rates began to try to seek out their own level, and they skyrocketed. And savings and loans had mortgages. All the assets they had on their books were mortgages. They barely did consumer loans and barely did any type of commercial lending at that point. Their charge was to build homes. So they had millions of dollars of 8.5% loans on their books, and deposit rates went to 15%. I mean, we were paying 15% on a CD at one point when rates were at their worst. And so that 13% interest rate that you got on your first home was actually below what we were having to pay on deposits, and that's why it was a special rate. So during the 80s, you had this time frame where farms were falling through. The oil economy had fallen by the waysides. They changed the rules on real estate investment. They had allowed for accelerated depreciation for investors for a number of years, where you could buy a home and depreciate it faster than your normal amortized schedule, and so that was a benefit to buy homes and stuff and keep them rented. The taxation rules changed. Yeah. They did all of that at the same time, and they crushed the savings and loan industry. And hundreds and hundreds and hundreds of savings loans went under. It was one of the first big major bank crises that we've seen. And so as a function of that, the interest rates were so high, nobody was building homes in the 80s either. And during that time frame, we still hadn't assimilated all of the homes in the Schilling area from the early 60s. We still had extra inventory. There were people that had bought those groups of homes and they wanted to sell them, but at a 15% interest rate. No, I mean, as a realtor, man, things were pretty tough.
And that's the thing with the houses we really need now, which would be $165,000 to $180,000 homes. That's the reason we have a shortage of them.
They're non-existent.
No, because in 65, 66, 67, 68, 69, 70, why would you build a house? Because you couldn't compete with all of the inventory that was everywhere. So 9,000 people had left. We didn't really need them. The people who had money were building their custom homes.
Yes.
But there were not really those homes that we would desire today for what I call the first-time home buyer, or even a second-time move-up.
There were some homes being built, but not to the extent that they would have been built had we not had the other housing stock. Yeah. And so the shortage that lies in that particular area is a unique thing to Salina, and something that most Salinans don't understand. Why don't you have the housing stock that you should have? Well, it was still being impacted by the loss of all these people. And then during the 80s, the interest rate cycle and stuff being so high, it was impossible for home values to appreciate, because if you're paying 15%, you can't charge a premium on your house. You have to try to get rid of it. And there were all kinds of interesting ways to finance a home at that period. We'd do anything to try to get the interest rate financing, or to get financing that someone could afford just to get them in a house. So you had this effect of shilling, you had this effect of the dynamics of the changing financial markets. And we actually didn't see, I would track these things, we didn't start to see values of homes begin to increase and a normalcy come to the marketplace of homes being built in a more normal manner for a community of our size until the early 90s. And I remember 1992, 1993 as being a period where we first saw a good amount of increase in the value of homes in that early 90s period. And of course, then we go into the Y2K era and stuff, of which was the year 2000, where everyone thought the world was going to implode based upon computers. So the Fed lowered interest rates to zero to make sure that there was enough liquidity in the marketplace for banks to be able to meet the needs of people that might be impacted by all these computers crashing and such, so that there was money available. Well, the really big banks said, hey, I have free money now, and I'm loaning out all the money I can on commercial loans because those make sense for me, and I've bought the investments that I want to buy. What could I do? Oh, I know. Let's make up new creative ideas to get people into homes, because home values never go down. And so they began to come up with programs where they would loan 125% of the value of the home. They would come up with programs where you didn't have to have a credit report. There was a program that we saw come through that would loan money to people that were on their way to bankruptcy, and would bet on the values that they would get after that. There were programs that if you actually put a verification of deposit, a verification of employment, or a credit report in the file, your file was completely issued null and void. You couldn't have anything in the file. It was whatever the borrower said they made and who they owed was what you had to accept. And if you had anything else in there, they would disallow the loan. So the craziness that entered that marketplace to take 0% money and earn 6 or 7% on it during that time frame then created the next giant bubble, which was the huge crash of that happened during 2006 and 2007, where no one thought anything about any values falling more than 10% in the market. And we saw homes in California that fell by 50%, and homes all over the country.
I call that the 08 because it finally
it was
hit
really
Salina in
08 was really the end.
Yeah, since I've been in real estate, 08 and 2011 have been the two historic ones that were the biggest impact in my real estate career.
Right.
And so I remember those dates of there because it was the least amount of homes kind of sold. Everybody was losing value from there, and so we got about 5 minutes left. Believe it or not, we've been talking for quite a while here, but we got about 5 minutes left, and I want to know, for you personally, in the next 5 years, if you looked back 5 years from now, what do you want to accomplish in the next 5 years as Tom Wilbur, for the community, for yourself, and what do you got working on right now?
Well, my goal is the same almost every day when I get up, and that's just trying to figure out a way to help people. And so, in regards to the things that I enjoy doing art, and I enjoy songwriting, and I enjoy doing the Facebook types of things and stuff to try to help people, but I still am actively working with boards of local organizations. I'm on Kansas Wesleyan's foundation board, and I think we've seen a huge change in the past 10 years of how viable Kansas Wesleyan is. Kansas Wesleyan has a glorious history, but under Matt Thompson during his tenure here, and I think the increased interest by local people to get seriously involved in helping develop Kansas Wesleyan has been a passion of mine, because I see how important it is. We're having record numbers of kids come here from all over the country, and be involved in all kinds of things. And I Kansas Wesleyan, in my opinion, is a Christian college and stuff, and a lot of schools call themselves that, but they've kind of lost their way in that regard. So I love the input that goes in there. My friend Pastor Smith spends a lot of time there mentoring a lot of the minority pops, and Annie Boswell, who I just love, works with a lot of the Hispanic kids that come from all over the country and just puts her arms around them and loves them up. And so I love what Wesleyan's doing. In terms of my business relationships, I'm on the board with Jason Ingermanson and the Freddy's restaurants and things that we have all over the country. And Jason's a phenomenal individual. I'm sure you'll have him on your podcast.
Well, I need you to advocate for me. So I've got to get him on here, okay? So, and he's speaking of Jason Ingermanson with JRI, and he's come up in other podcasts on there. And so I don't know what it's going to take to get him in the hot seat. The guy is crazy busy. You know what I mean? Like, I've talked to him. He knows that I'm seeking him out. You know, I'm trying to find an hour.
I don't know that I have great influence over him. He is one of the most important leaders, in my opinion, in Salina history. The things that he does behind the scenes to prosper Salina. He was growing up a farm boy in the Chapman area, and Salina, I'm sure, was a big city to him. I remember him sharing once that through high school he had never left the state of Kansas. But we have Freddy's restaurants nationwide, from Virginia to Atlanta to Dallas to Phoenix to Salt Lake City, from Texas up through the Salina operations. And then, of course, between Mocha's and the original Grande, those are franchises that are owned by the group, and they are fundamentally were founded by Jason and his team, so they will continue to grow, and then eventually they will sell franchises as an internal thing. And then we have a group called Chompy's in Arizona that is very successful.
Will we ever get a Chompy's in Salina?
I'm not sure. I think between Mocha's kind of takes the place of a Chompy's for us, because we actually use a lot of the Chompy's bread lines and stuff, and Chompy's uses Mocha's coffee, and so we have some cross types of things there. So I enjoy being a part of that. And then I have other various business interests, and again, like some real estate that we own. But my for 5 years, I don't know, being a good dad, trying to do the best I can within the community, trying to help people where it can take place, and just being a voice for people who need help. I meet people all the time. I have a real passion for single parent mothers. Years ago, we had a study done in Salina, and we found that most single parent moms in Salina live at poverty level or below. And the study that we had done was conducted by K-State and was given to all the banks. And at that time, when we received it, I went to our board of directors, and we put together a program that would loan single men or single women 100% of the purchase price of their home, because most people in a position of poverty level can't save up any down payment or enough down payment to get involved in housing. It was one of the more successful programs that I've been involved in, and we've been able to see other banks replicate similar things. But there are a lot of housing programs today that have grants available that weren't available during the time that we did that. But we have a real crisis in family, and we have a lot of these women that one of the nurses that works in the nursing home that my mom's in, she actively has cancer. She has 2 daughters that live with her, and each of the daughters have 2 children. And she works double shifts. And I look at people like that, and the courage and the persistence they have, and love of family, and the things that they try to do, and in any way that I can, I just try to figure out how to help somebody like that. And so I've had a real We have, broken family structure here and everywhere. We have because we sit at the crossroads of two major interstates in Salina, we have a lot of drug traffic in Salina. Salina is considered to be a high drug trafficking area. So I think we all, as citizens and stuff, need to just be aware between policing and support for elimination of drug-type activities and keeping criminal things in check and supporting all those things in our community and stuff that need support. I just want to be a good citizen and help in that regard. So
I think you've accomplished that.
Well, we do our best and
Yeah.
stuff. And I wasn't blowing smoke earlier. I know how much you do, and each of us has our place. We have that sphere of influence and the folks that you can work with and try to help influence or try to give them a hand up instead of a hand out. A lot of the folks that I work with in mentoring, they don't need something from me. They just need a little better direction and stuff on how to attack each day. And so it's choices that you make. It's prioritization of those things that are important to you. And so many people in our area are so community minded and so family oriented, and we have a lot of strong Christian folks in our community who have strong faith, and they help other people. And so I love Salina, I always have, and that's just part of my DNA. So anyway.
Well, it's been great spending an hour with you. We're going to try and cut it out an hour.
Okay. When you originally said 5 hours, I was concerned.
Yeah, no.
And then I didn't know I had to pay to be on the show like
You
I
did.
did.
We thank you.
The $250. It's
$250 entry fee to be here. This is great. It's
amazing.
Welsh, Welsh. Make sure you spell that correctly. That's on there. But anyway, again, thank you for just the Wilbur name as far as in the community. I mean, it really does stand out. Your father did some great things. You've carried that on. I've really noticed you throughout my career watching you help people. You're a community leader. I really want to say I appreciate that, and continue to do what you do, because I know you love to serve people. So,
well, thank you. I appreciate that.
Yeah, I just really wanted to say that. So
thanks.
Anyway, thanks again, Tom, for being on, and stay tuned. And you're going to put in a big plug for me. Someday we will have Jason Ingermanson on here.
I think we can twist his arm at some point. He's an amazing person, and it's when you there are a lot of people in Salina who behind the scenes create value and support Salina in ways that you would never ever think possible. And Jason's just one of those guys. He loves the community, has a real sense of community, and wants to prosper Salina and the people who live here, and does things that if you can get it out of him to share with you, it'll be interesting.
Yep. All right, Tom. Have a great day. Appreciate you being on. Thanks for listening.
Okay.